What is going on YouTube? It's your boy Dollar Mike back at it again with another video, and a lot has been going on with the stock market recently, so I want to talk about it in today's video. And as you can tell by the title of the video, I'm going to be talking about a stock market crash, a stock market collapse, a correction, whatever you want to call it. We're going to talk about that today, how you can prepare for something like that in a safe way, or if you want to take more risks, you can do that as well in today's video. We're going to go over 6 different ways to actually make money in a stock market crash, correction, or collapse, depending on how everything plays out. So let's not waste any more time. Let's get right into the video. I make videos talking all about personal finance, so anything personal finance related, I got you covered right here. Let's go. So as I mentioned before, there's definitely fear when it comes to investing in the stock market right now. We've seen it literally last week with the Dow being down over 700 points in a single day, and then the very next day it rebounds to over 500-point gains. My portfolio in particular was almost down over $2,500 before it rebounded the very next day. We have tech stocks like Apple and Microsoft steadily climbing and reaching new all-time highs. We have the entire retail investing scene slowing up a bit. On top of that, we also have inflation worries as well as a new Delta variant of an illness that's been around for some time now that could be even worse with cases going up as well. So it's a lot going on in the world and in the stock market that causes a lot of fear, or puts a lot of fear into the stock market, that might result in people either taking their money out and putting it into bonds or putting it into a savings account or whatever they want to do with their particular money. Either way, nobody knows at all when the next market crash will be. It could be next week, next month, next year, or not until the next 10 years. We have no idea. Nobody has any idea. So if anybody tells you they know when the stock market's going to crash, they're lying to you, because they don't know, just like I don't know, just like you don't know. Regardless, the best thing that you can do to always help yourself out is to be prepared for any situation that might arise. So in this video, we're going to talk about 6 different ways that you can make some money in the stock market, or 6 different ways to essentially protect yourself if stocks actually do continue to go down or tank or crash or correct or do whatever they plan on doing in the sometime in the future. The first 3 tips are more on the safer side of things, and the final 3 tips are more on the riskier side of things. So whichever one you may be into, maybe you're into both, or you want to start with safe and then move on over to risk, we can do that as well. We're going to get into it, but we're going to start with the first safe one, which is having an emergency fund. As a personal finance channel here on YouTube, I think it's pretty important to have yourself an emergency fund. In fact, 60% of Americans do not have $1,000 saved up for a $1,000 emergency. So if that 60% of people ran into an emergency where they had to pay $1,000, then they likely would not be able to pay it with cash. They would have to go ahead and charge it on a credit card, which they'll probably pay interest on, which basically makes you pay even more money out of pocket that you already don't have to begin with. So definitely the first thing you need to do is have an emergency fund. And how much of an emergency fund do you need to have? You need to have at least 3 to 6 months of expenses in your emergency fund. So whatever all your bills are for the month, that means your phone bill, that means your car note, that means your car insurance, any bill that you can think of, your rent, anything like that, add it all up for the month, find out how much that total is, and multiply that total by 3, and that'll give you your 3-month buffer for the emergency fund. I would always recommend that you start with 3 months. After you reach 3 months, then hit 6 months. After 6 months, you can go ahead and save an emergency fund for a year if you feel like you would need one for a year. But generally speaking, I don't personally save an emergency fund for a year. But after the things that have happened over the past couple of years, or the past 2020, anything's really possible when it comes to what can happen in the world. So saving for a whole year emergency fund, if you can do it over time, it doesn't have to be rushed. If you can do it, would actually be a great thing to do as well. Because think about it. If you can have all your bills covered for a whole year, imagine what you could do if you just didn't have to worry about paying any bills, because you already saved that money anyway. So either way, 3 to 6 months of an emergency fund is a must, and that's the first tip. Once you have that 3 to 6 month emergency fund saved up, then you can move on over to the next tip for me personally. And the next tip for me personally is to have cash ready to go ahead and buy the dip. Overall, you should be investing your money, most of your money, because that's how you get the greatest return when it comes to your money. Savings accounts and bonds simply don't provide enough returns to combat inflation, so you definitely want to have your money invested if you already have that emergency fund set up and you're all good to go there. And since you already have that 3 to 6 month buffer, then you can go ahead and invest the difference into the stock market. Yes, even when the stock market is down, that's actually the best time to invest in the stock market. Cash ready to buy the dip. Like I just mentioned a couple minutes ago, the Dow took a crazy 700-point drop last week and then recovered the very next day. So imagine if you just had any amount of money on the sidelines ready to put in the market the day it took a 700-point dip and then rebounded the very next day, then you automatically would have made a solid profit on your money, and you could have went ahead and sold that very next day if you wanted to, but that implies taxes and stuff like that. So overall, I would still hold long term. I would be actual investor and not try to just trade or buy the dip and then just try to sell the next day. But you get what I'm saying. And either way, a lot of people actually did this, including myself, literally last year. I actually bought in the market on one of the worst days that you could actually buy in the market on, and I wrote it up because that was one of the worst days to buy in the market. I bought in the market. I actually put like $2,500 or $3,000 into the market. I made a whole full-blown video talking about it. I have portfolio video showing you the entire progress from March of 2020 to now. My portfolio is sitting at like $28,000. If I didn't start then I just would have started at a later date. But the whole point of investing your money is to start today, is to start investing today for your tomorrow. Your tomorrow doesn't have to actually be tomorrow. It could be 10, 20, 50 years from now. Either way, invest your money because that's how you'll see your greatest return. The last safe tip that I got for you guys today is a process called dollar cost averaging, and that actually piggybacks off of buying the dip. So basically, dollar cost averaging is buying the dip. When you dollar cost average into the stock market, or you dollar cost average into any particular stock, you're essentially buying the stock consistently over time, no matter what the actual price is. And then if you see a dip, like for instance, if it drops 700 points in a single day, then you definitely buy more that day in particular. But overall, when you dollar cost average on a stock, you're going to get an average of however much you bought, and that average will balance out long term because this is a long-term investment strategy. This isn't something you do for 2 years, 3 years. This is something that you do for at least 20 years, in my personal opinion. If you do this for at least 20 years, you're definitely going to see solid returns in the stock market, way more than you probably would ever imagine that you would receive. But trust me, it's there because history has actually proven that to be. I personally deposit $100 every single week into my Robinhood portfolio, and I also have some reoccurring investments set up. So basically, I'm dollar cost averaging into these particular stocks, which is Microsoft, $5 a week no matter what the price is, a dividend ETF known as ticker symbol PEY or PAY. I have $5 a week going there. I also have $5 a week going towards Verizon, $10 every single week going towards Coinbase, and then $8 every single month going towards Disney stocks. So overall, these will be invested every single week no matter what. That is dollar cost averaging for you at its finest. Now let's move on over to the riskier side of things as far as trying to make money in the stock market in case of a crash, a correction, a collapse, or whatever. I'm actually going to open my Robinhood account just to show you guys this one. It'll make more sense if I show you guys. But one of the strategies I want to mention today is covered calls. So with covered calls, if you actually own 100 shares of a particular stock, you can do covered calls on that particular stock, and I'm going to explain that right here. So let's actually scroll on down. Let's look at PSEC. I got PSEC right here. I have 118 shares of PSEC, Prospect Capital. Let's change the view to that, and you can see my return here and all kind of good stuff, but we're not here for that. We're here for the actual covered call strategies. So covered calls is options in the stock market. If you guys don't know what options is, make sure you check out my options video. I go over the basics of options. I'm not some options guru. I'm not the best at options. I made a lot of money from options, but overall, I'm not a pro at it, but I do okay. Either way, let me show you what a covered call is on this particular stock, which is PSEC, but you can do this on any stock that you have 100 shares in. So what you're going to do is you're going to go ahead and click on trade. You're going to go ahead and click on trade options, and with a covered call, you're essentially betting that the stock price of the stock won't reach a certain point, and if it doesn't reach that certain point, then you keep your 100 shares and you also collect a premium. That premium could be worth anywhere between $0 and a lot of money, basically. So let's just say I think a market crash is coming up, or I personally just don't think PSEC will go over $8 a share by September 17th. What I'm going to do is I'm going to click on September 17th. I'm going to hit sell at the top, and it's also set for call. And right here, $8 is the $8 call. So basically, if it stays under $8 a share by that particular closing date, which is September 17th, then I'll receive a premium of $35. And it's that simple. If I had multiple of these, then I could do multiple, but right now I would only do one because I only have 100 shares of PSEC. If I had more shares of PSEC, then I could take a greater risk. Just loading up one covered call would give me this result based on what I have for PSEC and actually what it's worth, and on top of that, what the strike price is at. But like I said, if you don't really understand most of this, then it's definitely mentioned in my options video, so definitely check out my options video for beginners because it's pretty simple. And it's also tons of people on YouTube that make Robinhood options and just trading options video for beginners, so definitely check those videos out. They're great videos out there, and that's how I learned to actually do options. So yeah, another risky way to make some money in a stock market crash is to actually buy some puts. This is also another form of options. You can do a lot of stuff with options, but I'm just saying it's another form of options. So let's actually go back into my Robinhood, and we're actually going to pull up Microsoft stock this time. So here we are with Microsoft stock. Microsoft is currently sitting at $289.63 a share right now, which is actually an all-time high for Microsoft. So right now, Microsoft is basically at an all-time high, and if it's at an all-time high, then it could keep going up, but things go down. down. Everything doesn't go up forever and everything doesn't go down forever. So this might be a great time to actually go ahead and place a put on Microsoft. And when you place a put on a stock, you're essentially betting that the stock price will go down. If the stock price continues to go down, you'll make even more money. And if it keeps going down, you'll make even more money. But if it goes up, you'll lose money. But you'll only lose a set amount of money. And we can find out what that might be right here. So let's go ahead and click on Microsoft, click on trade and trade options. And let's just go out to, let's say October 15th. So let's just say October 15th. And we're also going to have it set for buy. And over here, we're going to go ahead and click on put. So right now, like I said before, Microsoft's share price is sitting at $289.63 a share. And let's just say we think that Microsoft is going to go down in the future and hopefully go down way before October 15th. So basically, if you want to buy a put, basically betting that Microsoft stock will be under $285 a share by October 15th, then you can go ahead and put a put on that. If Microsoft stock went down, like dropped to like $180 a share, then you would make tons of money. I mean, at that point you would make a killing. But you can see here how much that would cost. So you can see here it says right now $9.53. That's multiplied by 100 because when you do options, you're actually renting or borrowing or however you want to look at it using 100 shares. So it's $953, or rounding it up a little bit just so they can cover the collateral and everything like that, $955. So if I went ahead and did this, I would basically, at max, I would lose $955 if it went the other way, meaning if Microsoft stock kept going up, I would lose at most $955. And the max profit I will receive right here, it looks like, is about $27,545. That's assuming if it drops below what point? I would have to probably go ahead and put the whole thing in a calculator to find out that for you. But either way, you get the point. The more it goes down, the more money you make. And the same thing works for calls. If you want to place calls, you want to do that in a stock market crash though. But if you want to do calls, the more it would go up, the more money you would make. It's that simple. Usually on the unlimited scale, but as I can see right here, Microsoft, the max profit is $27,545. But hey, that's not that bad when you consider you're betting $955. But at the same time, do you actually think Microsoft will go that low where you would make that much money by October 15th as well? So a lot of factors here, a lot, even more than that, really, when it comes to options. Like I said, this is pretty risky stuff, and I really wouldn't do this unless you really know what you're doing, or at least, like, you know, educate yourself to a decent point. But if you want to take the risk is here for you to take. A lot of people do this on a daily basis, and a lot of people make a lot of money trading options. So do what you want to do. High risk, high reward for sure, but there you go. You can buy puts as well. The last risky way to make some money when it comes to a stock market crash, correction, or whatever is actually to do something that I've been talking about on this channel for, I would say, a couple months now, and that's actually buy either one or another particular stock. I actually have one of them right now in my portfolio, and that's actually by ticker symbol QYLD or ticker symbol RYLD. I mentioned QYLD in all of my dividend videos now because they actually pay me a solid dividend, literally over 10% yield on that dividend, which is lovely if they actually pay it out, and they've been pretty consistent at paying it out. But what exactly is QYLD and RYLD on the stock market? QYLD stands for Global X Funds, a global NASDAQ 100 covered call ETF. And they're sitting at $22.51 a share right now. And overall, if you can see over the past couple months and whatnot, they don't really move that much in price. Over the past year, they only moved $1.50, but we're not here for that. We're not here for the growth or the falls of QYLD or RYLD. We're here for the dividend that they actually pay out and the high dividend yield that we actually receive. So if you actually notice, the name of that ETF actually had covered call inside, and we already talked about covered calls here in today's video. And basically this is the same exact thing, but it actually does covered calls on the entire S&P 500 index, so the top 500 companies in the US trading on the stock market right now. So basically, when you invest your money with QYLD, they're going to go ahead and do covered calls on the stock market, and if they actually receive any profits, they're going to pay you out a nice solid dividend yield of at least 10%, and that's also a monthly paying dividend. So of course, if you're in a bear market where people aren't making that much money and the stock prices aren't really going up, if the stock prices aren't going up, then those strike prices aren't getting hit. If those strike prices aren't getting hit, then QYLD will make a lot of money by holding all those shares of Apple, all those shares of Microsoft, all betting people that, oh yeah, it's not going to go to this point, and if it doesn't go to that point, then they make a lot of profits. When the stock market goes up, then QYLD doesn't do too hot. You probably won't make that much in dividends. But if the stock market goes down or stays about the same, then you'll make a lot of money in passive income from QYLD every single month. Like I said, right now I think the dividend yield is sitting between 11%, 12%, but overall it fluctuates anywhere between 9 and about 14%, which I have no problem with, because overall you'll never find a 9 to 14% basically a savings account that's going to pay you that much money every single month, or even for 10 years. So the fact that we can get something like that on the stock market and you can openly invest into it right now is even better. And I've been making a lot of passive income from it, which I can show you right here. So if we scroll down, you can actually see I have an upcoming dividend from them of $11.21, which will then go back into the stock to make me even more money because it'll buy me more shares. And that $11.21 will basically buy me half a share. Either way, I have about 50 shares, overall market value of about $1,000, overall up about $3. Like I said, you're not going to make money from any type of gains in the stock. You're going to make all your money from dividends. So let's scroll down even further. Let's go ahead and click on show more, click on dividends, and consistently every single month I'm making solid passive income from QYLD. If I invested more, I would simply make more. And if stock prices don't keep reaching all-time highs, or we have a crash or something like that and they don't reach those all-time highs, like I said, you're going to get paid out that consistent dividend every single month. If they reach those highs, then you'll get paid less. If they don't reach those highs, then you'll get paid a lot more. That simple. Every single month. Can't go wrong with that. And RYLD actually works the same exact way. So if we go ahead and click on RYLD, let me type it in. RYLD Global X Russell 2000 covered call. Basically, the Russell 2000 is small cap stocks, or basically smaller companies. So not the S&P 500, not the Apples, the Microsoft, the Teslas, all that. The Russell 2000 is just smaller companies that you might not know as much about, or just might not know at all. The same exact thing works here, and that's literally how it works. That's all it is. But personally, for me, I'm not personally invested in RYLD, but if I do run into a stock market crash like the one we had back in 2020, or the correction or dip or whatever you want to call it that we had back in 2020, that'll be a great time to go ahead and invest in RYLD, because you'll get those gains on the way back up. Plus, you'll actually make a decent amount of income from the actual dividend as well. So can't knock it until you try it, I guess, and that's just that when it comes to that. Either way, I would say these last two options, or QYLD and RYLD, is probably one of the safest, riskiest ways versus doing the puts and also doing covered calls. I don't really do puts too often because I don't really like betting that the stock price of a stock will go down. It's just not really like, I just don't really do that often. And then covered calls, I just don't have the right stocks that I have, because you have to have 100 shares. I don't have the right stocks to actually go ahead and do covered calls on. So if I had like an AMD or Microsoft or Apple, if I had 100 shares of those companies, sure, I'll probably play around with the covered calls. But for the companies that I have for 100 shares, it just doesn't really work out for me. So I just don't do covered calls personally. But if I had more money, then obviously I would. Either way, there you go. That's 6 different ways that you can make some money when it comes to the stock market if we have a crash, correction, collapse, whatever you want to call it. And there you go. That's pretty much all I got for this video. So make sure you drop a like on this video. If you did enjoy it, make sure you check out the links down below to get yourself some free stocks, because you're going to get free stocks all over the place. Public has a stock where you can get up to $1,000 in free stock. Webull has 2 free stocks. Robinhood has a free stock. Doe has a free stock. Tons of free stocks. Check out the links down below for that. Check out the links down below for crypto. Check out the links down below to get your money back in gas. Check out my free link down below so you can actually sign up for my Discord community. We literally talk about everything personal finance in there. So if you're interested in stuff like that, that'd be great. We'll talk about this stuff as well, dividend stocks, everything. If you're a beginner investor or a pro, hop in. It's free. Literally, it's free. We can talk about it. We can do whatever. It's a great community. So that, I think we're sitting at over 150 people now. So pretty cool. So definitely hop in that. Patreon if you want to support the channel even further. The link is down below for that. And that's basically it. So I hope you guys enjoyed this video. I know it was a little bit lengthy. Well, we'll see. It's lengthy recording it. We'll see how much it actually turns out to be. But yeah, I actually wanted to get this video out for you guys. I think it's a quality video. Yeah, that's kind of it. So take care. I'll have more videos coming up. I got a dividend and portfolio update video coming up very soon. So make sure you're locked in, like, subscribe, all that good stuff. I'm out. I'll catch you guys in the next one. Dollar Mike. Peace.